The S&P 500 and the Nasdaq 100 have been on an absolute tear. We've pushed all-time highs, but the reaction so far has been strong from sellers at these highs. Pretty big indication that something is wrong underneath the surface here. That's the big thing that I'm focused on right now. And we need to talk about exactly what's happening with this data and what the Fed is saying regarding the stock market right now, because everyone's still expecting cuts pretty soon. I'm going to give you my expectation on cuts and also the stocks that have the best potential going into this week. Let's get to work. So as always, we're going to go straight into the Nasdaq. And as we look at the Nasdaq, you can see you push into highs right here. You were previously trying to and attempting to, kind of make those lower highs, as you can see, and lower lows, right? And then you broke out of that, obviously, from NVIDIA's earnings. Buyers stepped in incredibly fast. Now, we had a little bit of a demand level or supply level established up here. We got above it, but sellers ultimately held us in this range on NQ, as you can see, and pushed us down, right? That was the concern. And, that's really where we're at in the week, pushing back down towards the bottom of 17.9, that key level that goes back here. Again, and you're asking where these demand levels come from. The link is down below if you're interested, from Lux Algo, the custom scripts. You also have the volume one coming in very soon. So make sure you check them out if you're interested, right? And so you're pushing back down, right? So I do anticipate a little bit of downside maybe to start the week on Monday, but we'll go more into that here in a second. Now we go to ES, right? S&P futures. Again, you can see that you were making kind of lower highs here, but you never made a lower low. And you actually formed another demand here, which was a pretty strong. It was pretty strong, the reaction that we had there. And obviously, NVIDIA shot up, shot the rest of the market up. And that's what happened. Now, you made much higher, highs here on ES and the S&P. That was a very strong viewpoint here. Now, what I will say is if you look here, and I can quickly already tell you that you're not going to have much liquidity once you start losing this range. And the further you bring this out, you'll see it gets less and less. So if you start to break back below 50.90, you're probably coming back down to 50.66 rather quick. And I would argue you really don't get any liquidity until you get down to 50.52. Okay, so those are the big levels right now. So I think it's pretty important going into this week that you hold this level right here, 50.90, 50.92. It held overnight and it was a pretty big level there as well. Now the last one I'm going to cover, and I don't cover them a lot, but it's Dow. And Dow has been truly impressive. I can just come back and I can just show you very quickly the range that you've kind of been trading in. And it's not going to be the prettiest, but I do still want to show what's happening here. You can kind of see the channel that you've just been trading straight to the upside. This goes all the way back to around, early December, right? Extremely bullish. I mean, I would say Dow has actually been maybe one of the most bullish indexes of just making higher highs and higher lows continually. So we did see that as well. And then a little bit of a pullback at the end of the day also. So again, looking at indexes, I wouldn't say you're necessarily bearish yet. Why? Because you haven't really broken lows, right? Now, the reaction up here wasn't fantastic. And if Nasdaq is a leading indicator here going into ES, then yeah, you should have some concern. But overall, you still look decent here. That's what I'm getting from the technicals as far as here. Also, too, the newsletter goes out on Sunday, just to let you know. This is absolutely free. The link is down below, so make sure you tap in. Again, we cover futures, what's happening there, all of our key levels for the week, expectations from last week, Nasdaq, Dow, the Russell, and then we go into our few favorite stocks as well. So you can see 175, all the levels mentioned for you. So you know exactly what we're expecting overall. Microsoft 415, that level you couldn't get above. We were at 404 last week. We told you our targets. We told you exactly what we were looking for there as well. The economic calendar, everything else in between. So make sure you tap in so you can see everything. Again, hopefully this helps you out. The link is down below. Now, looking at NQ and looking at ES, you're only going to get so much information, right? And I'm going to go over some data analytics here as well here in a second. But what I'll say is you can't be too bearish yet, because you broke all-time highs. I mean, you're doing kind of similar things we've seen. I'll also say this. Sellers had an opportunity to really push you down. Now, I'll say NVIDIA earnings were great, but sellers, to push you down, make a lower low on NQ, but to not be able to get ES or Dow on the downside this week was a really big, lackluster move. It was concerning, right? Sellers should have been able to push you down. They did not. Tech did retrace, and that was the one opportunity that I think bears had here. And it just shows that the market is still pricing in higher moves. That's where you're seeing Goldman, Morgan Stanley raise expectations and targets on ES going into the end of the year. And I'll say, you might say that these guys are fugazi or these guys are, rigged. Morgan Stanley and Goldman have, over the past 2 years, had the best projections. Morgan Stanley, Goldman, and yeah, they're all JP Morgan, Morgan Stanley, Goldman have all done the best. We've seen last year, 2022, they priced the best moves, commodities and the volatility index. Last year, they expected a rebound after Q1, right? They said, probably rebound at the end of the year, right? And so it's really important to just get a grasp of what they're looking at and to just see overall the feel, and not to necessarily copy, but to see the feel that what big money is doing and how they're trading this. And you can clearly see that they are attacking the market right now. And that's what's happening overall while we're seeing tech push higher highs and make higher lows in the meantime as well. Now, as always, we're going to cover a little bit of DXY and yields here as well. You can see again, the DXY broke back below our key level right here, coming back down. You had your inverse head and shoulders, you kind of broke up and you're kind of just failing here. This is concerning, even though with the downside today, DXY still looks weak. And I know some people like, Tyler, I don't care about yield or DXY. Do what you got to do. It's been a pretty good indicator for us. And we know when dollar gets weak, it's pointed to some really good upside in the broad market, especially over the past year or two. The 30-year yield, we saw the 30-year yield give up a lot today as well. A lot. Now, I will say over the past basically 24 hours, even with some of the data that's come out, we still have seen the expectation of a cut to happen in June or May. Nothing's changed statistically there. So again, it makes sense that yields are coming down. Even with bad data, you're still expecting a cut during those months. That's overall good news. And some of you guys like to say, Tyler, well, what happens every time we cut rates? What happens? Typically the market crashes, it does this, it does that. And so I just want to quickly just go over SPY for you really quick. Just give you a blast to the past of when we've cut rates and things along those lines. So just bear with me for a second, because for all of you guys, and again, I know what you're doing. You're on Twitter. You've seen 5 posts from your favorite influencer that doesn't post anything that actually helps you. But again, we'll be transparent here and go over this. So if you go back to some of the times we've cut rates, right? You can go back into, 2020 is a really great time actually after COVID, right? Basically right here, we just didn't raise rates. We had rates at 0 and we just left them for basically 2 years into all-time highs. So what that tells you off the rip is when you're sitting at an area with low rates or low interest rates across the board, it sparks growth in the economy and sparks the want to take out loans and credit for companies. I'm just saying, if right now, for instance, it's going to cost you 7% to buy a house, like on your interest rate. If rates drop tomorrow, hypothetically to 3%, if they just cut rates dramatically, right? Could you imagine the flood of what would happen to the housing market? Everyone, the demand's already pent up. It's already proven. Go look at the stats. But yeah, that's what would kind of take place there. Now, you go back to something like 2018, right? The taper tantrum, right? So we were cutting rates. We were going back and forth. Now, I want to just give you a visual, just to let you know. Now, traditionally, when we cut rates, what happens is we raise rates, right? They start to do some work, and then we cut them, and then we'll sit flat. And then we'll raise them again, and then we'll cut them, and then we'll sit flat. And then maybe we'll cut, and then maybe we'll raise them again. But it's like a heartbeat, right? It goes back and forth, back and forth. We never raise rates. In all the history of the stock market, go look again at the rate cuts and when this has happened. We've never just raised and raised and raised and raised for 2 years. That's never happened. Well, I want to give you a for instance. Well, right now this has happened. That is what happened specifically. The whole time we were crashing here basically from 2022 all the way down to essentially, I would say mid 2023, rates were just going up and up and up and up and up, just raising them nonstop. And during this time, what was happening? Rates were going down the entire time. Actually, they didn't just go down. They were basically up here normal, and they just went all the way down, and they stayed all the way at lows until right here. That's when everything changed. Okay? And so what happened? The market pulled back. And I know some of you are like, well, Tyler, sometimes if we go back in data, when we raise rates, sometimes the market bounces. Well, the market did bounce occasionally here. It did get some bounces, right? But overall, you operated in a downtrend for a year. So I'm here to tell you, people, when we do cut rates, we might get an initial downside spike. It's just like when you're on Twitter every day and you see people talking about random stocks, or they're like, oh, the market's dumping, finally, right? But in reality, we're still making higher lows and we just make and break new highs. That's how I'm looking at the market. Now, we might get initial downside, possible, right? I don't care. I would still be incredibly bullish when we get rate cuts because of what it's going to do, specifically to something like the IWM, right? The IWM. Well, what happened with the IWM in 2020? Very interesting. Why does no one talk about this when we talk about rate cuts? Well, when rates were actually at their lowest point, 0, well, the IWM did something bizarre. It went up in a vertical line, arguably more bullish than what happened with SPY, arguably. So just here in from 2020 March, just 1 year, in a 1 year span, you went up 150%. 150% in a 1 year span there. Now again, you had a great push here. You had a really great push. But again, if we just look at that 1 year span right there into March, you only performed, again, go do the research for yourself, 80% on SPY. The IWM actually outperformed it by almost a little bit over 50%. Why is no one talking about this? Because when the IWM actually, again, this sparks what's really happening with risk on and what takes place. When you lower rates, growth can excel because people can borrow money. Borrowing money is basically the foundation of our country. So again, hope you understand that. That's why I'm so big on what's happening with yields. And that's why I continue to say, when the 30-year yield gets below 4%, I'm telling you, great things are going to happen. That's why this whole thing sparked last year. When did we bottom out? Well, it's when we got below 4% on the 30-year rate. Boom, 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 boom. All year long, or half the year, until what happened right here when we got back above 4% here on the 30-year yield. We bounced up. I'll tell you what happened. Remember, we made a lot of money off of this. You had your really nice pullback from July 2023 into October where you touched the 200 SMA and bounced. It's exactly what happened. So again, there's a direct correlation to what's happening here. You can see October, right when you topped out on yields and dumped. There's a direct correlation. And I'm telling you, when that happens, you break 4% and start to drop, it's going to be beautiful for the market. And that's why you need to be watching what's happening with rate cuts and specifically the 30-year yield. Okay, now I'm sorry. I really didn't even plan on going on that rant, but I saw some comments, people saying like the 30-year old doesn't matter. And Tyler, what are you talking about? This and that. Again, when I go over something, I try to provide evidence, right? I don't want you to come here and just say, hey, Tyler, I believe you, right? I like to have educated conversations and dialogue, especially with the comments down below. Now, maybe I'll put some clickbait in the title or this or that. But at the end of the day, when you come to the channel, you're getting my honest opinion. And you can never say, Tyler lied. Tyler wasn't being honest here. You can't say that. There's never been a time where we couldn't back up what we say. So again, it's important that we take in the data and pay attention to what's got us to where we're at. Now, I will say the market lately has run even though yields are high. That's even more bullish. That's still even better. Because what do we know? Even when yields start to drop, when the dollar drops, we've gotten guaranteed reactions from the market and a risk on point of view as well. So it's just more fuel in the fire, right? Am I saying that the market can't go up if yields are going up? That's not what I'm saying. I'm being very clear about that. I think you should be a little bit more careful when that's happening. But what I will say is we do know for a fact when yields have dropped, the market has moved bullishly. That's the fact there. So that's all I'm trying to point in here. Let's go over some equities and let's get to the end of it. I'm going to be pretty quick with this, so let's go really, really quick. Apple, we're going to go really quick. Sorry, the chart's a little bit messy here. So what you were looking for here, let me bring the 200 SMA up right here. You can see right here what we were looking for. We mentioned yesterday, we want to see a break above 185. You couldn't get it. You double topped, you broke back down and got below 200 SMA. Look where you're bouncing, right at the Lux Algo zone. Pretty hilarious. Anyways, if Apple breaks below like 182, 182.3, I'm looking for a push down to 181, roughly down there. Tesla, I know you guys love it, but I'm sorry. I hope you're paying attention to the key levels. I really do. I want you guys to succeed, but I hope you're paying attention. Number one, if you break and hold above 194, we have 197, then 199, 200. Well, you pushed up to 197. You couldn't hold it. You broke down today at open, like we mentioned from yesterday's YouTube video. Once you lost it, you actually broke, retested, and then pushed down to where? 194, which you tried to hold, and then you formed a supply level and pushed down further, signaling a lot of weakness there. So that's definitely a concern. Tesla below 194, very weak. Not interested in the name whatsoever. NVIDIA, we had really good movement. So we mentioned this yesterday. Also, what you wanted to see was a break. As you can see from Wednesday, you retested, you shot up. Now today, what do we want to see? Pretty awesome. You gapped up. We had our previous level here from our ascending triangle. You retested, you bounced around $15, $25, and then you came back down. All you want to see here is this. You would like to see us hold above 800 to get some more calls in the money. A lot of calls are going to be in the money as it is. So we want to see if we can just continue to hold above 780 roughly. 780 bare minimum. If we get below that, it can start to get dangerous for some downside. SMCI, hate the name, not interested at all. What you're really doing though here, put in a lower high. I want to see if we put in a lower low. But you're really just kind of in a range now, and it's a huge range. What it reminds us of is AVGO. So if you remember AVGO, back last year, we went on this crazy bull run, right? Let's go all the way back to like four hours. You can see. So what happens is you go on this crazy bull run last year in May. It was awesome. We caught it. But then everyone's like, oh, you're going to dump. Well, you really didn't, right? You just stayed in a really big range, right? Of like almost $130, right? For months. And then eventually you broke, retested, and went crazy again. Well, again, I'm not saying that that's what's going to happen. That's what I'm considering here. I don't think SMCI has to collapse. I do think they're overvalued. I do think it's really dangerous, but you possibly could just start sitting in a range here, especially if these semiconductor companies continue to print and do what they're doing. And you might just get this crazy justification of keeping at this price. I would steer clear personally, but I do expect a retest down to like 775, 780. It would be highly likely. Going into AMD, again, the levels are your best friend. 174.7. I posted this on Twitter today, and I don't know what else to say, guys. But like, I hope you pay attention to the levels. When you look at what's happening here, you come right into the 174 here today. You bounce again. You're kind of just sitting there. So again, that's what we're looking for. If you hold that level, you're bullish. Under that level, I'm looking for downside. Simple as that. Going into Amazon, another great play on the day as well. You got that break above 171. You've been holding previous highs here too from yesterday, 173.5. And now you're just trying to churn and get back above 177.5, your previous highs that you had. Possible double top. They're going to be added to the Dow pretty soon. I'd look for continuation here to upside. Over 175, you're targeting 177.3. That's your next level there. Going a little bit further, Microsoft, great day today. You had a really nice gap up in like 415. You couldn't hold above it. You want to see a break and hold of 415. In this range, I'm not super interested. If we start breaking back below 408, 407, I'm looking for, start breaking down at below 410 in general. I'm looking for 407, then 403 to the downside. Here, though, you got to get above 415 for me to be bullish. Simple as that. Netflix, you're holding 576. We hit our target of 590. You couldn't hold above it. Again, you formed a little demand here. So we want to see if we can hold this level overall. Above 576, I'm bullish. Above 593, I think you're pushing past 600. So definitely keep that on your chart as well. Those are all the names I'm looking at. That's all I'm really considering. Sorry if I missed anything. I'll see you guys on Monday. Have a good one, traders.